Hey guys, welcome to another weekly market review session. Let's get straight into it. So, currently right now we are on my S&P 500. Before we step into this, I just want to take a look at FinVis. Okay, FinVis, I want to show all of you how the markets has been. So if you take a look, guys, very obviously, if you take a look, you can see last week, or as we know for the month of September, it's been a bit choppy. We can see that most stocks are down 4%, 5%, Amazon down about 8%, Tesla down about 10%. Okay, very, very expected. Okay, very, very expected. Now, the thing is, this is how the markets have been. Surprised and not too surprised. Let me explain what I mean by this. So, the month of September, okay, we look at seasonality. The month of September, traditionally, you can see kind of a bearish month or sideways month. Then it spikes up towards the third week and then it drops back down majorly. But if you look at it, again, how the markets have been, I've not really seen much of this spike up, but rather over the last week, the markets have been dropping for itself. Okay. Now, if you see it, October tends to be a month where things rally back up, where we have what I like to call a bit of a reversal month. Okay. So seldom, in my experience, do September and October end up being bearish months, unless they are like last year, where the markets were dropping. It was a bear market. Then you can have 2 consecutive months of both bearishness. But in normal circumstance, if all goes well, typically the month of October is a reversal month. It's not a month where both back to back they are down for one another. Okay. Now, if we go onto my charts, back on my S&P 500, you can see that right now, prices have actually dropped below my 100 SMA. Okay, so this is my 100 SMA for myself. If I scroll back out, okay, literally, the last time when this happened was over here. Okay, last time when this happened was over here. This is somewhere around the March period before we had this entire rally and move up for ourselves. Okay, so last time this happened was back in March. Okay, since then things have been going back up steadily with the markets. Now, I just want to show as well on a little bit of a longer term picture as well. So if I put my daily over here, okay, and then after that I also put in 20 EMA on a weekly as well. Okay. So I think these two are a really good indicator. My 20 EMA on a weekly chart and my 100 SMA. Typically, if you can see, all right, this is 2021, the entire rally. When prices went up, okay, when prices went up, typically if they dropped below this line, that would mean that we would have continued downwards movement. So if I take to the previous September, for example, all right, so this is September 2021, okay, my prices actually went to my 120 MA lines, okay, and for a couple of days, they stayed below. Okay, but what happened next day? Ended up rallying back up. Okay, they ended up rallying back up. But however, once this breaks, we can see, or if I take the most recent drop in the markets, okay, for example, if I just replay and show you guys, all right, you can see over here, the moment prices went down over here, okay, we had our bear market. Okay, the rest is history. You know what happened. The rest is bear market. You can see prices start to drop majorly. Okay, maybe come back up a bit, but the bear market starts to happen. So these MA lines are very critical, okay, because previously, if you take a look, all right, if you take a look over here, when markets did drop below, but went back up, very, very obvious. It didn't stay too long below my lines, okay, my 20 and my 100 MA lines, and then it had its bounce back up. But once it stayed there for a significant period of time, we ended up going into a bear market of prices dropping lower for ourselves. So how can you use this for yourself, guys? Very simple. I will look at the current prices. Okay, so current prices where we are at, you can see our prices in the S&P have just gone below my 20 and 100 MA lines. Now, if it stays below here for about 2 weeks, right? So about 14 days, about 2 weeks for ourselves, then I can say that prices will move further down in the markets, okay? And then for the short term, I will turn buyers for myself. But if it remains here, maybe for the next couple of days, chop sideways, okay? And it's less than 14 days, maybe the next 2 days, 3 days, and then we have a slight maybe reversal back up, movement back up, then I will say the bullish market will continue. We are still in the bullish movement and going into the month of October, like I mentioned, a possible reversal month. But if it stays down and below these two lines for the next 2 weeks, 14 days, then I can tell for the short term, we are definitely going on the buyer's perspective. Okay. Now, where are the levels do I think it can drop? Number one, very, very obvious, where we are currently at. Okay. Okay. So where we are currently at for ourselves, okay, around here. Okay, where we are currently, that's where our price is sitting. The next one is roughly around here. Okay. So around my 431 to 430 level. Okay, that's where prices are sitting at. That's where I believe the prices are going to chop for the next couple of days. If it goes below that, then we will have a further downside movement. Okay, and even okay over here 421. I think this is the almighty. If it breaks down further from here, then definitely turn buyers and short-term for the turn short-term buyers for the immediate period. Okay, so again, okay, if I draw my line, okay, if I draw my line or my trend line, you know, from the bottom over here in October all the way up, you can see, you know, very, very clearly we are slowly coming to those levels where I've drawn for myself as well. We are coming to those levels. If it does break below that, then, you know, do expect a bearishness for the immediate term. Okay. Now, how do you position yourself? Okay. How do you position yourself for the current market or the current term? Very, very simple. Okay. If you are long-term investor or position trading, so you're buying stocks for investment, meaning the next 10 years for yourself, or you are position trading, meaning holding for the next 3 months, 6 months, 1 year for yourself. These have been good levels to accumulate for yourself. Okay. So if I turn on my SMA, if I turn on my SMA, very, very obviously, you can see currently we are at my 100 SMA, good levels to accumulate shares for yourself, right? Let me just turn on my 50, 100, 200 together. Okay, so you can see currently we are at my 100 MA, very, very good levels for you to accumulate shares for yourself, okay? For long-term investment, definitely, please, you can go in, slowly accumulate, please dollar cost average, don't go in all in. Same for position trading. Okay, position trading, you can also go in slowly in tranches, okay? Because you're looking to only sell off in the next 3, 6, 9 months for yourself. Swing trades, I will not take swing trades yet. Only if it breaks the 421, all right, like the 421 area, like I showed you just now, where my trend line intersected, okay? That's when I will turn bearish for the short term and take my swing trades, right? So let me just redraw the trend so all of you can see. Okay, if it breaks below this point, then only will I turn bearish and do bearish swing trades. Okay, now those of you who day trade is still the best thing for you to do. Those of you who know about our 1K a day club, all right, our students over here have been day trading, making fantastic returns with this market volatility. For those of you who don't, okay, it's very simply where we trade for a day and we can make anywhere from $100 to eventually 1K a day for yourself. All right. So if you're day trading, perfect environment. Those who are long-term investing and position trading, also perfect environment. I wouldn't do any swing trades until it breaks this level for myself. Okay. Now, in terms of this week, if we check Forex Factory, not much in terms of the economic events. Okay. What I will pay attention to is GDP. Okay. GDP over here, very important data, will cause volatility and affect the markets. Thankfully, it's before market opening. So those of you who are day trading, don't need to worry. Those of you who are doing your position or long-term investment, if market drops, please look to collate some more shares for yourself. Okay. And lastly, I would watch out for this Jerome Powell speaking at 4 a.m. Very, very odd timing. I'm not too sure yet what is the basis of this event, what he's actually covering. But whenever he speaks, there is volatility in the markets. Okay, so just be aware of this when you are doing your trading. Okay, so with that, that's it, guys. Nothing else for me for this week. Okay, we are going into a month of October. So be cautious, play safe, stay safe if you're trading. For those of you who are doing your investments, managing your own portfolio, remember what I said about the long-term investments, position trading, swing trades, and day trading. Okay, act accordingly and continue to trade safe in the markets, guys. All right, so stay safe, take care, and I will see you next week for another weekly market review session. All right, peace, guys.